A lot of you guys don't know that inside the candlestick is one of the most important information when it comes to your trading and increasing your probability. A lot of people just look at candlesticks for face value and they don't understand that you could actually read them like a book inside of the candle themselves. All you guys see is the opening and close, but today we're going to be dissecting previous price action and actually understanding each and every single candlestick leading up to our breakouts. And this will help you in any single strategy because this is basically helping you understand how stocks move in the first place. And if you're able to understand that, you're able to understand how to not get faked out and when to actually enter and exit and when to actually execute at the best times possible. So let's get right into it. All right, now let's go over a trade that we took for a real example. Take 350 to the upside on Tesla. Now, how can we read candlesticks and how can this increase our probability of not getting faked out and when to exit and enter at the right points? Because you guys see this broke 350, a lot of people will get faked out right here. How do we avoid that? Well, we have to dissect every single candlestick going into that move. What is price action telling us? Besides the time of sales, let's read into every single candlestick. We come down. Very nice, very sellable. We start to come down in the morning, as you guys can see right here. We start to come down, people taking profits, keep going down. Then, out of nowhere, these buyers come in and absolutely flip price action. So that shows us that sellers thought they were in control, and then once enough buyers came through, we flipped, and now sentiment changes. But then guess what? We come up and then we start to have this wick right here showing that buyers aren't as confident either to the upside. Sellers tried, and then once it got to that area right here, that's when it flipped. So sellers aren't in control there. We flip, and then buyers aren't in control there. So then it just keeps going back and forth. Next thing you know, we open up, and then we're still inside of this wick, and then we come right back down. So now it's telling us that it's just back and forth and there's no real move in one direction. And this just shows us that price action is not confident in one direction yet. Then we start to bounce off of this area right here and then we start to come up. But guess what? These wicks happen again, showing us that buyers tried and sellers keep trying to bring back down. And then you could also see the body of the candle. Look how small that is. This was bigger, but then it got smaller. And this is a little bit bigger, but then we have a bigger wick, showing us that these sellers are still trying to take control in that area. Not confident enough for me to take any sort of move. Next thing you know, we come back up. And at this point, I am not entering because there's a higher probability of getting faked out because of this previous price action. It is so back and forth. These sellers keep bringing it down, bringing it down, bringing it down. There's no real signs of aggression. Even if you're looking at the time of sales, it was super slow. And then out of nowhere, it could have started popping up there. But again, that's not how we take a trade. And that just leads to a fake out. Next thing you know, this candle out of nowhere shoots up. Highest candle closure of this whole entire time. But then guess what? We have this wick again. We're wicking right at that 350, come right back down. So now, basing it off of previous price action, this whole area, sellers are trying to take control in here. There is literally a fight between buyers and sellers. Then out of nowhere, this green candle, then boom. We have a higher probability of a fake out because of all of this, and we never had any real pullback. I want to see what happens when we pull back and then come up, right? We cannot break it like this, and especially after this candle, giving us that wick right here at the top of 350 and this small, very small candle body that shows that buyers were not able to progress whatsoever. But this candle showed progress from the buyers, and then it just stops like that, showing that the buyers didn't really make any real progress, and we need to see a pullback to make sure that sellers aren't in control as much. Because one pullback, guess what happened last pullback? We dumped like that. What happened to the other last pullback? We literally dumped under both of those candles right there. So I want to see a pullback around this area and then go up. That shows me, number one, that's half of this candle. That's where it was trying to reject at. And I wanted to see it hold. So we see that increase in the bids. So we know that buyers are still continuing to bring it up. And sellers, when they have the chance, they don't just bring it right down. But guess what? We broke out of 350. And again, how do you tell not to get faked out? This previous price action, all of these circles tell me not to get in on this 350 breakout. Why? Because you literally have a 40% chance, 50% chance of getting faked out on this So I'm not basing my trades off a flip of a coin. We have to wait for that pullback, and guess what? We broke under that, and we just absolutely died like that. Easy way to not get faked out is literally by looking at that previous price action and identifying what is going on at this 350, because the only way we can go up if there's more buyers there than sellers, and there's more aggressive buyers there than sellers. And looking at the previous price action, it literally tells you that in that story. Now, taking a look on a trade that I took today, we took that 339 to the upside. Now, what we want to see is how price action is getting to that point. Now, as you guys can see, price started reacting there intraday in that area, and again intraday in that area. And you might be wondering, yo, how'd you not get faked out? Because what I like to see is it come up and then a pullback and then go. Especially after a move from here all the way up to there. Again, looking at this previous price action, we came up, then came right back down, then came up. Who knows where it wants to go, right? Without looking at the time of sales, there's not a clear direction here of where it wants to go. Now, if we clear all of these out and then we see what's happening after, we rejected that. But guess what? We start to hold a little bit higher than we usually did, right? This was there. And then now we're holding a little bit higher than we usually were, showing that these buyers are starting to hold it up a little bit more, and these sellers aren't really in control yet. We had these two candles to the downside, which were really strong, but it still wasn't as strong as those buyers bringing it right back up. And then we were holding this area. Next thing you know, this candlestick goes from here all the way up to here, showing that the real buyers are stepping in on this candle. Number one. Number two, time and sales really showed that buyers were really coming in on this candle. That's how stocks move, is with buyers and sellers. So if we have a lot more buyers here than relatively, then we could assume if they're clearing every single level and we still see enough buyers coming in at this high day right here, then we could anticipate our entry and get in on that 339 just by seeing that we have an increase of buying pressure coming in. Next thing you know, this candle is absolutely exploding. The two candles before that showed that the sellers tried to bring it down, brought it right back up. Sellers tried to bring it down, right back up. Next thing you know, this candle's absolutely exploding. We got in. This thing absolutely ran $2, then came right back down, retested 339, and exploded. That's what I like to see. That's the price action I want to see. Now, same thing here with Qs. Let's say we're looking at this 499 to the upside on Qs. What are we looking at? Now we're looking at this previous price action. You guys see it literally looks like a barcode. I can scan this in a self-checkout at Walmart because it's just so back and forth. So guess what? You just don't take a trade in that chop. You know, a lot of people trying to anticipate it or think they're heroes and getting in like here or whatever. And it's like, okay, have fun with your 40% win rate. Let's actually take an educated trade here. What is happening? So we came up in the morning, came right back down with this wick, and we start to bounce off this opening right there. This is the lowest it made, and we're still trying to bounce off this low day. And we come right back up, another wick right here, showing that buyers are still in control, bringing it up, little pullback, bringing it up, bringing it up, bringing it up. Now, obviously, we can't take a trade if we come all the way up to here, because that's $1 already. And if you guys know Qs, you guys know it doesn't just run $1 and just keep going. And if it does, then you already missed the move. You want to get in, for example, right here if that was a key level. But since it's not a key level, then you just don't get in. There is no way I'm getting in right here without a proper pullback. Guess what? We had a little pullback there. But what do we notice? We noticed that, number one, we came up. We're starting to see these wicks here, which is fine because the wicks, we are extended. The wicks are just showing that sellers are starting to come in at that area. We did literally have a $2 move from here to here with one red candle, one little pullback. So it was justified to have those wicks there. Then we had this little red candle right there, people taking profits. And then guess what? The high of this candle is $4.99, came up, came right back down, wick right here. Shows me that sellers are really starting to take control there, and we need an increase of buying pressure for us to take this relative to this candle and this candle. And we just didn't see it. It stopped in that same area that it did previously. Then we try to come up right back down. So we know that 499 is a strong level, and this is perfect for a later trade. So whenever it breaks later in the day, hopefully by 11, because after 11, I'm not going to take it, I will be able to take this 499 with more confidence, knowing that there is a strong level there. And as long as I see more buyers coming in than it was previously, then we have a higher probability of this to break. We come back down, up, down, up, down, literally go like this and pretend like it's not there and wait for it to come in that direction. Next thing you know, we start to come up, little pullback. Now this is the highest pullback in this area, right? We draw a box right around here. This is the highest pullback in this area. You guys see all these candles inside of this. Then we broke out of that, held that area. Then we start coming up. This candle is absolutely going. Buying pressure was there. I was watching this. Time of sales was going crazy. There was more buyers there than there was previously. And we had this pullback here. That's what I like to see, a little pullback. Nice structured candle. Next thing you know, another nice structured candle. No wick there, showing that these buyers just going like that. And this was a 50 to 60 cent move, which is around 25% of the contracts alone. It pulled back to around that 499 and then absolutely just kept going above that 500. Now, NVIDIA, same thing here. We can see buyers came in the first 2 minutes, then sellers try to bring it right back down. Guess what? Buyers are able to hold those lows right there, and then we came right back up with aggression. Then people taking profits. This is great price action. Then we came right back up, and then we have this wick right here, and then we have another wick right there showing that, you know, sellers were there, and then sellers try to bring it down, and then they brought it right back up. Sellers try to bring it down, buyers brought them right back up. But what you guys notice is these candlesticks are starting to get a little bit smaller, showing that we are extended and these buyers aren't really pushing as much as they were previously. So if there's any key level here, I'm not going to be able to take it because it's showing a slowdown and it's showing that buyers are starting to get less aggressive. And I can't expect those aggressive breakouts, as you guys see in my videos, if we are getting slower and slower and slower. So what needs to happen is we come up, people taking profits, and then we go. Guess what? Didn't happen. So now we know that that 143.5 is looking good. We want to see some reactions right next to it. Next thing you know, we have the highest candle closures in this area, right in this area. But we have this wick right here. So it's a little bit tricky when we have these wicks, but we aren't close enough yet to where it's like, okay, because we still have around 10 cents of room for buyers to show themselves. So we know we have a higher chance of not getting faked out. So we have this wick right here, which literally creating a bigger zone up here. And we have to see what it does in this area. Next thing you know, red to green. Next candle, red to green, pushing through that wall like it's nothing. Buyers really showing themselves in this area on the time of sales. Buyers are really coming in. Compared to this, to that, it was a huge difference. Buyers holding these bids up. No signs of buyers losing those bids. They keep bringing it up, bring their limit orders up, and then just smashing through these asks. The sellers are not able to hold off at all. And these buyers just coming in crazy. Next thing you know, we break this, but then we have this little wick right here. Then this candle body gets a little bit smaller, and then we have a bigger wick. Then sellers try to strike, bring it right back down. Next thing you know, buyers absolutely came in there, exploded to the 80s. Then after that, we have this wick right here. We're starting to hold off a little bit. This is where I'm mostly out. And then we came up, a wick again, came right back down. Now, if sellers really wanted to, they should have dropped it here. But guess what? Buyers were able to hold these 80s very strongly and then came right back up. Sellers tried to bring it down, came right back up. Literally red to green, and then we just explode into that 144. This is where I'm 90% out just because we already had signs of struggling. We already had a little bit of signs of struggling there. That's why we took half off there. We already have signs of struggling right in that area, and then we explode again. Once we see more signs of just trouble, that's how you know it's just going to do that consolidation thing that it usually does and just go back and forth in that area. any time now, and I'm not going to be stuck in a trade for an hour for the same exact percentage. I'm going to be 90% out. And then once it clears under this low right there, which it did right there, I would be fully out because I'm not trying to be a part of a back and forth game. And let's see exactly what happened after. It probably went back and forth. It did. Back and forth, because that's the breakout, and that's where most of the energy comes from. And it gets expelled there, and then that's it. That's it for the rest of the day, usually. And it would just go back and forth, or like slowly grind up or slowly grind down. This is not how I trade. So if you guys learn anything, let me know in the comments down below. Make sure you guys subscribe, and I'll see you guys in the next video. Peace.